What's up, everybody? Welcome back. Today we are talking about Google. So Google stock, this is the 5-year chart. We start at $60. We go all the way up to $132. It has gained 127%, which outpaces the S&P 500. They are currently at a $1.6 trillion market cap with a price to earnings ratio of 23, which is lower than most of the other tech stocks right now. Let's check out their financials. Let's go to their statements, and we can see annually they have been growing quite nicely. Up 20%, 20% again. Looks like they're hovering between, and then even with our rougher economic times, they still grew by 9% last year. And their earnings have been going up quite considerably as well. Well, it looks like yeah. They got an extra 12 billion here, which gave them better earnings than it should have shown. But basically, it's pretty steady growth in their net income. In terms of their balance sheet, they actually have negative net debt, so they have tons of cash. Cash flow statement, yeah, you can see it is a pretty steady rise on their cash flow statement. And they are buying back lots and lots of stock. All right, so those are the important things there. Let's look at their 10K and see where most of their money is coming from. So looks like Google search and other it has grown quite a bit from 2022 into 2023, which is interesting because I hear all this talk about how AI is going to take market share away from Google, and people aren't going to be searching on Google anymore. They're going to be searching through AI, but it doesn't look like that has shown up in the numbers quite yet. So maybe we'll see that in the future, maybe not. YouTube ads, YouTube's not going away. YouTube doesn't really make up a ton of their revenue, but it is growing at a steady clip, and Google Network looks like it has dropped by a little bit. Not quite sure exactly what Google Network is. Probably their maybe cloud. No, Google Cloud's right here. Google Network, maybe that's their like Amazon Web Services basically of Google. Then we've got Google subscriptions and platforms and devices. So they're selling phones and stuff. That's going to be 34 billion as well. And then we've got Google Cloud is 33 billion. So in total, their revenues have gained by about 10 or 15% last year. Well, 10% last year. Now let's go over to my discounted cash flow model for these guys. And let me zoom in a little bit. Here's Google, and we can see for their 2024 estimates. So last year they did this right here. And for next year, they're estimated to actually decrease in revenue, which is interesting, but they're expected to increase their earnings by a lot. So that means that analysts are expecting them to go into cost-cutting mode and really expand their margins a lot. And then 2025, they expect revenue to pick up again and their earnings to follow along. So plugging this in to the discounted cash flow model, we are starting with this number here, 87 billion in earnings, and we are going to use the analyst estimates for growth at 17%. And we put that in there. And then next year, I think they're going to keep on growing pretty well, 15, 15, 12. And earnings, I just think that growth has to drop off at some point. Otherwise, you are going to be larger than any other company in the entire world very, very quickly. So we've got the earnings dropping off, and our terminal growth assumption for Google is just 5%. And with these assumptions and a 10% like discount rate, because I want a 10% return on all of my stocks in my portfolio, then we can see that the fair value of Google is at $224 a share, which is much higher than their current price at $132. Another thing we could do is we could try and figure out what analysts are pricing into this stock and see why it is currently trading at $132. So let's just say that we get 17% growth like they say in 2025, but then the next year after that we just get 10%, and then after that, it declines pretty sharply to like 8%, and then 6 and 6, and then maybe 5 and 5, and then our terminal growth rate at 0.04. And it looks like even that is still fair value. What if terminal growth is at 0.02? So just 2%. So it keeps in line with inflation, and still that is about where our fair value comes to. So $130, current price at 132. And so this is kind of what the market is pricing in for Google. They're pricing in slowing growth, like very slow growth, and then their terminal growth at just keeping in line with inflation. So do with that information what you will, but for me, I think I would add to this position at these current prices. And otherwise, that's about it for me. If you liked the video, hit that like button, and I'll see you in the next one.